back. So let's get into the practical stuff. Specifically, starting with how do you actually buy a stock? What's the process? Step 1, you need to open a brokerage account. A broker is basically a company that lets you buy and sell stocks. Popular ones include Fidelity, Charles Schwab, Robinhood, and Weibull. We'll talk more about choosing a broker in the next slide. Step 2, fund your account. You will link your bank account to your brokerage account and transfer money. And here's my advice, only transfer money you can afford to lose. Don't invest your rent money or your emergency fund. Start small if you need to. Step 3, research stocks. Don't just randomly pick stocks. Look at company fundamentals, read news about them, see how they have performed. We'll cover research strategies later in this video. Step 4, place an order. You will search for the stock using its ticker symbol like capital AAPL for Apple, and then you enter how many shares you want to buy. Click submit and boom, you're done. Step 5, you now own the stock. It'll show up in your portfolio and you can watch it go up and down. Congratulations, you're officially an investor. It's really that simple. The hardest part is actually deciding which stocks to buy, but we'll help you with that. So, which broker should you use? There are a lot of options out there, and honestly, they are all pretty similar these days. But let me break down the most popular ones for beginners like you and me. Fidelity and Charles Schwab are probably the best options if you are serious about learning to invest. They have zero commission trading, meaning you don't pay fees when you buy or sell stocks. They also have amazing research tools and educational resources. Their customer service is excellent and they are very established, trusted companies. If you are going to be a long-term investor, I recommend one of these. Then you have Robinhood and Webull, which are more focused on having really simple, user-friendly apps. These are great if you want something that's super easy to understand and navigate. They also offer fractional shares, which means you can buy a piece of a stock even if you can't afford a full share. And there are no account minimums, so you can start with just a few dollars. The downside is they have fewer research tools than the bigger brokers. Here's what I'd look for when I choosing a broker. Zero commission trading. You don't want to pay fees every time you trade. No or low account minimums. You should be able to start with whatever amount you have. An easy to use mobile app. You'll be checking this a lot. Trust me. Educational resources. You want to keep learning. And good customer support because you'll probably have questions. Honestly, you can't really go wrong with any of these. Just pick one and get started. Let's talk about what actually makes stock prices go up and or down. This confused me at first, but it's actually pretty logical once you understand it. The biggest factor is supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell, then buy, the price goes down. It's that simple. But what makes people want to buy or sell? Well, company performance is huge. If a company is making more money, growing their revenue, and increasing their profits, people want to buy the stock. If the company is struggling or losing money, people want to sell. News and events also matter a lot. If Apple announces an amazing new iPhone, the stock might jump up. If a company has a scandal or a lawsuit, the stock might drop. Economic reports, interest rate changes, political events, and all of this affects stock prices. And then there's investor sentiment, basically how people feel about the company's future. Sometimes stock go up even if company isn't profitable yet because investors believe it will be huge in the future. Tesla is a great example of this. You'll also hear the terms bull market and bear market. A bull market is when prices are rising, everyone's optimistic, and investors are buying. Think of a bull charging forward with its horns up. A bear market is when prices have fallen 20% or more. People are pessimistic and investors are selling. Think of a bear sweeping down with its paw. The important thing to remember is that stock prices change constantly, literally every second the market is open. Millions of trades are happening and prices adjust based on all of that activity. Types of stock orders. When you're ready to buy or sell a stock, you need to place what's called an order. There are different types of orders and it's important to understand the basics. The first and simplest is a market order. This means you buy or sell the stock immediately at whatever the current market price is. It's fast, it's simple, and it executes right away. The only catch is the price might vary slightly between when you click buy and when the order actually goes through, especially if the stock is moving quickly. Then there's a limit order. With this, you specify the exact price you're willing to pay. Let's say Apple is trading at $180, but you only want to buy if it drops to 175. You can sell a limit order at 175 and it will only execute if the stock reaches that price. The downside is if the stock never hits your price, you don't get the stock. Finally, there's a stop loss order. This is used to protect yourself from big losses. Let's say you bought a stock at $100 and you don't want to lose more than 10%. You can set a stop loss at $90 and then if the stock drops at that price, it automatically sells. The problem is sometimes stocks temporarily dip and then recover, so your stop loss might trigger even though the stock bounces back. For beginners, I'd say just stick with market orders. When the market is open, keep it simple at first. You can experiment with other orders types once you're more comfortable. When you look up a stock, you'll see what's called a stock code. Let me show you how to read one. At the top, you'll see the ticker symbol. That's the unique code for the stock. So Apple is capital AAPL. Microsoft is MSFT, Tesla is TSLA. You use this symbol to search for and trade stocks. Then you will see the current price. This is what the stock is trading at right now. It updates constantly during market hours. Below that, you'll see the change for the day. This shows how much the price moved in dollars and as a percentage. So you might see plus 2.30 and plus 1.26%, meaning the stock went up $2.30 or 1.26% since the market opened today. If it's green and has an up arrow, the stock is up. If it's red with the down arrow, it's down. You'll also see other information like volume, that's how many shares were traded. Market cap, that's the total value of the company. P/E ratio, that's a valuation metric we'll talk about in a bit later. And 52-week high and low, the highest and lowest prices the stock hit in the past year. Don't worry if this seems like a lot of information. You will get used to reading these codes pretty quickly. So thank you for watching this lesson. In next, we'll learn about important stock metrics, what are dividends, and also like blue chip stocks and many more interesting topics. So keep watching. Thank you.